The world of currencies, it's got to be keeping you pretty busy at this stage with the kind of volatility we're seeing, specifically when you're looking at the rand and its movements against the dollar.
Absolutely, Alishia. It's fun and games out there, and doesn't look like this volatility is going to end anytime soon. Still a lot of nervousness out there surrounding really two key issues. Of course, we've got the ongoing concerns about this global growth prognosis. Where are we headed? How long is this slowdown going to last? And then secondly, of course, these lingering debt concerns. It seems as though France is now at risk of some kind of a downgrade. That's at least what spooked the market yesterday. So a lot of nervousness out there. And of course, as we've been saying, risky assets have underperformed in the current environment, which is what you'd expect.
Yep, but of course, while you highlight, the international playing field and some of the factors there that are influencing the kind of movement we're seeing on the local unit, we shouldn't be discounting some of the domestic concerns that plague as well. Because if you're comparing the rand to the likes of the real over in Brazil, I mean, you're getting investors at this stage saying you're getting better yield with growth fundamentals that are looking certainly much stronger than they are in South Africa. So those domestic factors coming to bear equally so.
Yeah, I'd agree. Obviously at the moment, a lot of attention is being placed on growth outlooks and what kind of GDP countries are spurting out. In that regard, South Africa doesn't, as you say, stack up very well in compared to most of its emerging market counterparts. Countries like Brazil, obviously China, India, the list goes on as to those kind of recoveries that we've seen in those countries far outperforming that of South Africa. And of course, the pervasive strike action domestically is certainly not helping our causes. Granted, countries like Brazil at the moment have got higher yields than South Africa and probably likely to remain as such for quite some time, because it looks as though the Reserve Bank is going to stay pat with its rates for the foreseeable future. But the one thing that's been counted in South Africa's favour has been the lack of kind of capital controls that's been imposed in other countries like Brazil. So, investors in these times of uncertainty tend to flock for liquid, deep markets that don't have capital controls, and South Africa really fits that bill quite nicely. So we see that we are still having foreign interest for South African bonds because our yields are relatively high, and if push comes to shove, you can evacuate your investments in South Africa relatively quickly, as opposed to countries like Brazil where there's holding periods and taxes. So that's a little bit of a mitigating factor, but I agree, growth and yields can be, or better growth and yields can be found in other countries.
Well, of course, capital controls, one thing to consider where we've had emerging markets impose them as a way to kind of curb some of the strength we've seen filter through. In the meantime, we've seen further intervention from the likes of the Swiss National Bank, coming to the fore yesterday. And it seems like the plan there is to flood the market with liquidity to prevent strength. Question is around sustainability and just how effective a measure this possibly is.
Well, exactly. I think these central banks can come in from time to time, but they can't sustain the kind of pace and amount of accumulation on an ongoing basis. We've seen it time and time again with central banks trying to defend or prop up their currencies or limit, excessive appreciation. It just doesn't last. The market is just much bigger than them, and if the market wants to push a currency in a certain direction, I'm afraid that's probably where it's going to go. So I think, in that regard, obviously the South African Reserve Bank has paid attention to that, and we saw we're not going to likely see a repeat of what we had back in the 1990s. We're going to leave the rand for one to be determined more by market forces, and I think while we might see this periodic intervention from the likes of the Swiss Central Bank and the Bank of Japan, I don't think we can expect to see this on a sustained basis. It's just, as I said, if the market wants to push it in a certain direction, there's not much these central banks can do.